Hello, everyone. Welcome to this webinar brought to you by Bursa Malaysia and in collaborations with RHB Investment Bank. So hi, I'm Shaz, your moderator for today's session. Today, our webinar is Candlestick Chart Pattern You Must Know in Today's Market. So today, let me briefly introduce you our speaker for today's session. So today's session, we will have Joseph Chai from RHB Research. Joseph Chai, he joined RHB Research in September 2020 as a head of retail research. He's now covered mostly in technical analysis on Malaysia equities and also the future market. So he already spent several years as a technical chartist at a renowned regional charting software company. So hi, Mr. Joseph. How are you?
Class.
Hi.
Okay,
So I think everyone is ready. So I can pass the webinar back to you.
okay, all right. So I'll take over from here. So ladies and gentlemen, very good evening to you. Thank you for joining us this event. And I think thank you for Bursa for having me here tonight as well. So without further ado, let me start let me roll the slide. So I'm Joseph here. This is my number and this is my email. And I'm licensed by the Securities Commissions on the investment advice. So that's our usual disclaimers. And there are certain stocks that RHB right now is under the doing the deals. So in the interest of conflict of interest, these are our disclosures here. Okay, so let me share with you what are the topics that we are going to cover tonight. Firstly, I'll share with you price actions. How do we actually look at the price actions to understand the sentiments of the traders in the market, whether they are more bullish or whether they are more bearish, right? And then on, we are looking for some trading strategy. So I'll share with you some of the entry levels that I'm looking at all the different patterns. These are the 4 candlestick patterns I'll share with you that normally we'll look at the when the market at a turning point. That's where we want to catch the when the market start to turn. That's where we want to get into the market. And then on, finally, I'll look at my watch list. I'll share with you some of those stocks that right now under my watch list that probably you can consider to trade these stocks, right, for the coming sessions. Right. So let's look at the first topics. Before we begin, I just want to have a survey. How do you look at our FBM KLCI right now? Do you think the market is going up or going down or moving sideways? Now you may want to type your view in the Q&A box, and then I can see your reactions in the Q&A box. I see some. Wow. Okay, so Mr. Faiz saying the market is going down. Mr. Johari say market is sideways. And wow, it looks like more is down and sideways. Okay. Some say yeah, lower high and lower low. Okay, so we have some technical trader here as well. We are speaking the same lingo. Lower high, lower low. So yeah, no doubt today. So I look at today's market, right? There is a very strong pullback since the May. Right, our FBM KLCI actually came all the way down. Now, I just want to keep it in suspense. I'll share with you my view towards the end of the sessions. So make sure that you don't leave the sessions halfway. I'll share with you my view and some of the very important strategies afterwards. Right, there's a reason why I picked to have a seminar tonight, and I'm going to explain to you afterwards. Okay, so make sure you stay until the end of the seminars. Right. So firstly, this is one of the slides that I want to share with you. Now, from my years of observations, I think for the last, probably at least last 10 years, right, that I look at the market, right? This is one of the very important price and volume chart that I want to share with you, right? Everything that I've learned in the past about price and volume is all under this one PowerPoint. All right, let me start with on over here about fear. You see, market is coming down, the price is coming down, right? What do we see when the price is coming down? We are going to see a lot of volume. Now, when the price is coming down, when the volume is going up, it's telling us that the sentiment is very bearish. There are a lot of selling, right? And the selling pressure is high, right? And then usually in the usually in the bear market, right? That's not going to be one way down. There will be some kind of rebound, and then after the rebound, the market will go lower. So this is what we call lower low. But what I want you to notice is that on the second bottom, you can see that the volume starts to actually tapering, right? So this is what I call double bottom. Now, usually a good double bottom, the right bottom should see a lower volume, right? So on the first bottom, usually the volume is very high. That's where the selling climax will happen. Now, so over there, then the market starts to rebound again, and then they'll do a sideway. During this sideway, honestly speaking, it's very hard to trade during this sideway because there'll be a lot of fake breakout. It will break above and then it will break below. So if you are trading during this sideway market, I would say that most of the time, you incur some of the stop loss over here, but never give up in the market, right? As long as you apply the strategy that I share with you tonight, right? One of the very important strategy that I always share with my members is to scaling in the market, right? The keyword is called scaling in. You go in batch by batch and never all in. Let's say look at the stocks, you like the stock so much, never buy everything at one price, right? Spread out your buying so that you can actually diversify your risk. So during here, this is where the market do consolidations, and then this is the real breakout. That's where the major trend starts. That's where the bull market starts. So this is one thing that I want to share with you. There are a lot of trading opportunities during the different phases of the market. Right over here, there's a counter trend rebound. This is also a counter trend rebound. So what we want to do is that during all the turning point here, that's where we want to do scaling in to the market. Now, how do we look out for all the turning point, the V-shaped rebound here? And that's exactly the 4 candlestick patterns that I want to share with you together, how we look at the volume. Okay, let's start here. So firstly, to spot a reversal signal, which I'm using a candlestick, then before the breakout happens, that's where our entry as well. Finally, that's where the breakout happens. So basically tonight, I'll give you 3 strategy, 3 different entry point into one stocks. So whenever you look at one stocks that you like so much, you spread out your entry into 3 portions, right? That's what I call scaling in. Okay. Right, when the market is in a bearish mode, just like right now, what we are looking at right now, the market is bad, right? Sentiment is negative, right? The selling pressure is there, but what you want to do is to look at all the bottom, right? Looking for the technical rebound or counter trend rebound. So let's look at the first signal. Now, when the market is going down, right? What I want to look out for is a long black candlestick. Remember, just like I shared with you, right? Double bottom, right? Before a double bottom happen, what we need to look at is a long black candlestick. We want to wait for the market that selling price is very high. The sentiment is so negative. You see, there's one keyword here in the market: buy low, sell high. So how do you know that's a low, right? You need to wait for all the sellers to come up. You need to knock out all the bears. That's where the long black candlesticks will happen. Okay. Highest volume, right? You look at the chart, that long black candlestick must go together with highest volume. That's where the sentiment is the most bearish. And then you look for the long black candlestick, draw out 3 resistance and look for the reversal. So I'm going to show you how we're going to do it. Now, firstly, you look for this black colored candlestick. Now in a chart, any stocks that you want to buy that stocks for rebound, bottom fishing, your first thing first is look for this long black candlestick, okay? And then on, that's where the volume is the highest. And now you see, even though there's a long black candlesticks, the selling doesn't stop. There's still a follow through selling on the next day. And what do we see on the next day? The volume starts to be lower. So when I see these two bar, long black candlestick followed by another bearish candlestick, but the volume is lower, then I know the selling pressure get softened. That's where the market is about to turn, right? And then, okay, so that's where I'll do. I'll draw 3 lines over here on these long black candlesticks, okay? And then I mark it out as R1, R2, and R3, okay? And then what do I see? I see that the stock starts to rebound, all right? It penetrates into the first R1, right? That's where I can actually initiate my first positions, right? And then on, but after I initiated my first positions, the stock didn't move up. The stock actually go lower. This time around, it marks another hammer here. But remember, we call scaling in. Now, initially, I want to buy this stock with 3 positions, but right now, I only buy with 1 positions. Now, if suddenly you think that the market is not stable, you want to cut loss. When you do a cut loss over here, you only lost one of your 3 positions. So your risk is actually very low, okay? And you wait for the stock. And then on the next day, the stock actually rebounded and break above the R2. So when they break above the R2, that's where you can actually buy another second positions. And then on, what happened? Of course, eventually the stock will break the R3. That's where you buy your third position as well. Okay. Now you no need to must follow this technique mechanically. You can actually, when it break here, you can actually buy 1 positions, and you think that this is a very strong stocks. When you see there's a hammer here, you can actually add another second positions. Okay. Now in my trading strategies, I will never add a stocks. I call average down. Let's say I want to buy this stock into 3 positions. I only buy 1, 2, and then my third positions I'll never buy until the share price actually above R1 and on my first entry or second entry. That's where I'll buy on my third entry. Okay, so I want you to actually have this cultivate this habit that scaling in. And then when you do scaling in, just remember your number 3. Always number 3 is actually higher than number 1 and number 2. And then your second entry can be lower than the first entry. That's how you do the scaling in. That's where you diversify your risk, and then you can actually buy on the rounding bottom. That's what we call rounding bottom. The bottom is actually making a U-turn, right? That's you try to in this U-turn, yeah. So basically, this is the psychology. There's a black candlestick, selling pressure is very high. Then on, we see a green candle, right? That's what we call a bullish piercing pattern. But when you look at all this pattern, right, the bear, this is the selling. People sell from here until all the way to closing price. The bear still have some territory here, right? The strongest signal is when there's a green candle here that actually erase the whole candlestick here. That's why it break above the R3. That's why when you see this candlestick, we call piercing pattern, you need a confirmation pattern. So basically, the technique is very simple. You just look for the longest bearish candlestick, highest volume, break that candlestick into three lines, R1, R2, and R3, and then you scale in with these 3 lines. And that's the signal that I want to share with you tonight. Basically, when you look at the bottom of the chart, it should happen like hammer, it should happen something like bullish piercing, and then on, this is one of the most powerful pattern we call the bullish engulfing. And then on another one is called the bullish marubuzu, right? And by remember all these 4 patterns, you can actually catch the market bottom quite easily, right? So that's the 4 patterns that I want to share with you tonight. And now, when you have when the stock actually starts to move upwards, right? You can also look for a bullish candlestick with high volume. Let's say you can't catch the stock at the bottom, right? You missed the boat, right? R1, R2, R3, you missed all the 3. Then what do you do about that? right? You still have another entry level, right? Basically, I want to share with you another strategy called consolidations pattern, right? Now, when the stocks start to move up, they will try to pull back, right? They will try to pull back to retest the support level, right? That's where you can actually look for entry signal. I'll show you a pattern. Now, this is where the green candle happened here, this green candle. So this green candle actually start from here. Okay, you see there's a full breakout here, all right? And then on, that's where the green candle, full breakout, right? And then what happened is that the stock starts to actually pull back. Now, have you actually experienced this before? You want to buy something, when you see a green candle, the stock starts to pull back. That's where you jump into the stock. And then the next day, what happened? It went out a bit. Well, then on the fourth day, it go down some more, right? So imagine that when you see a green candle, then a red candle, well, on the T3 or T2, right? There's another red candle here. That's where a lot of retail people, they will start to actually cut loss. And when they cut loss, they sell everything, right? And then the sad thing is that when you sell everything here, the stock go up again. So this is actually what I call consolidations pattern. Remember, we're scaling in. When we buy a stocks, we buy batch by batch. When we sell, we also sell batch by batch. If you are very confident, you do all your study, right? You never sell, always leave something on hand, unless the stock really break all the support, then you sell everything. If not, you sell batch by batch, at least you have one lot still on your hand, right, in case the stock actually move up. So for those of you who actually missed the R1 and R2 and R3, that's where the pullback happens. And same thing, when I see a green candle, I'll draw 3 lines. I just wait for the breakout to happen. That's where I'll buy on the breakout. Now, if you're experienced enough, when you draw all the 3 lines here and then you do all your support resistance, right, you can actually buy when the stock actually have a pullback on a low volume, right? When the stock have a pullback on the low volume, that's where it tells me that the bull is still in control. You look at the charts here, the green candle here, the lower support is here. So you know where's your cut loss, right? And as long as the stock pull back nearer to your stop loss, you can actually add another one more positions over here. So this is buying on the consolidations that we are waiting for the next breakout. So on the third strategy, basically it's very straightforward. It's actually called breakout, right? And when the stocks break out with high volume, right, that's where you can actually enter again. So usually when the stocks actually break out, right, the volume will be very high, the momentum is fast, and then the stocks actually will move upwards. Yeah. So basically, one thing I also want to share with you is about human psychology, right? You see, when the stock actually move up, right, we have this FOMO, right, fear of missing out. Am I correct? And then you try to buy at a high, and then when the stock actually pull back, that's where you cut loss. And then when you cut loss, the stock actually move upwards. So today, we need to change this habit. We want to become a winner mindset. So how do you become a winner mindset? When the stock actually have a correction, strong corrections, we try to buy at the bottom. If we cannot buy at the bottom, we wait for the pullback, right? That's where the pullback happens. That's where you can actually buy your first positions. And then when the breakout happens, you buy on your second positions. So remember the key words here to survive in the stock market. Once you survive, you can make money, is scaling in, right? Never buy everything in one stock and at one share price. Now, many people, for beginners, it's easy to look at breakout, because when you see a breakout, there's easy to spot, it's a higher high. But the difficult part of the breakout is when you look at the breakout, you buy with high volume. When you buy at a high volume, you are buying at high, your risk is actually high. Your psychology not strong enough for beginners. That's where when the stock actually do a pullback, very easy, you do cut loss, right? So that's where I see many cases before, and I always advise or I suggest my friends or even clients, right, to do scaling in, right? Plan your trades and I hope that tonight, from all the strategy I share with you, you know what it means by scaling in. Never buy at one price, but you try to buy at a different price so that you can actually follow the rounding bottom. When the stock actually make a rounding bottom breakout, that's where you can actually add positions. Okay, so that's our main purpose tonight. To become a good trader, as long as you're scaling in, all right, you will be very safe in the market and you wouldn't miss a very bullish stocks. Now, another scenario that I want to share with you, same thing for the cut loss. Right now, many people, when they cut loss, they also cut everything. Once they feel the market is not stable, they cut everything, they sell everything. And usually when they sell everything, they sell or the pullback as well. So I also want to share with you, right, to be a good trader, don't sell everything at one go, sell in batches, right? You still need to sell, you still need to cut loss, but don't sell everything at one go. So probably today you sell some, tomorrow you sell a bit some, and then if the stock really hit your stop loss, then you sell everything. But at least you still have one lot on hand. Okay, so that's the idea that I want to share you: scaling in and scaling out. Okay, so I hope that you can catch the keyword here. Now, so this is basically the pullback, and then this is the breakout. So pullback, you can actually buy one, and then the breakout, you can actually buy. So basically tonight, what I want to share with you is that when the market actually tank at the near bottom, you buy one lot, and then when there's a consolidation, you buy another lot. When there's a breakout, you buy another lot, right? So if you are those people who are very short-term trading, you can actually look at what I've shared with you just on the candlestick, R1, R2, R3. You also can buy one lot, two lot, and three lot based on that candlestick pattern. Okay, so basically you see this is the pattern that I want to share with you. One bull candle, then a pullback, and then a breakout. So basically that's pretty straightforward, yeah. Okay. Okay, Mr. Rushton, I will I'll share with you more in the RHB Morning Kappa. I see some of your, if you have any questions, you can type in the Q&A. Don't type in the chat box. Let's type in the Q&A so that actually I can look at the Q&A and then I can answer your questions, okay? Right. So basically, this is one of the stocks that actually I experienced last year when the market actually have a corrections. You see there's a long black candlestick with the volume very high. Sentiment was very negative at that time, right? And then the stock actually tanked to very low, right? And afterwards, they do a sideways. So basically what I do is I look for the big candlestick, the black candlesticks, and I draw one horizontal line, right? So I tell myself, if the stock can break this horizontal line, that's where I'll buy. I'll make sure that it breaks here, I'll buy. That's my R3. Now I need to look for R1 and R2, right? So somewhere along here, I need to sniff out my R1 and R2. So that's how I do. Right, I see another white candle here. So that's where my R1 and R2 has appeared. So another white candle here, and then it went up. So basically, you see that in this example, I just want to share with you in the real world applications. Now, most of the time, right, it's very hard for us to look for, I mean, we know what happened afterwards, right? But the easier way to do is you look for black candlesticks, high volume, then you draw one horizontal line here. And then this horizontal line, what I do is I mark it as R3, right? Why I do it in R3? Because I know that my next missions during here is to look for R1 and R2. If I cannot spot R1 and R2 here, when they break R3, I just make sure that I will ride on this train. I'll never miss the stocks, okay? So that's what I'll do in all the stocks that I'm following, right? So basically, if you listen to what I share with you tonight, you feel very excited because now we are in a bear market. Market is going down. When the market is going down, we are going to see a lot of stocks that have actually a black candlestick with high volume. To make money, maybe 3 months or 6 months later, right? What you need to do is actually look for a black candlestick and then mark out your R3. And then when the market is going down, you look for your R1 and R2. You just buy as it go, right? So you never buy too much in one counter, and then you actually are scaling in to one counter, okay? So that's what I'll do. Now, so same thing, this is a high candlestick, high black candlestick and R3. That's where I mark out. And then in this example, I can't see the white candle, but when it go lower, there's a hammer here. So after I study everything, maybe I attended RHB morning kappa, then I feel that, wow, this hammer is actually very good. So you can actually buy your first R1 here, okay? And then on, when it go higher, then you can actually add on your R2. Now remember, right, after you initiate your R1, your first positions, your R2 or your second positions can go lower, okay? And but your third one must always be higher than the first or second, right? So that's actually the idea about that. Right, so in this example, I see a spot of one hammer. There's a white candle with high volume. Probably there's a consolidations. Then there's a breakout here. So over here, I can see that at least there's one position, second position, and a third positions here, right? So I will actually follow the rounding bottom process. Okay, so I hope that you like what I share with you this example. You see, why I when Busa asked me to give talk, why I actually pick on May and then the last week of May, because I before that somewhere in March, even in April, I know that May is a very bearish month, and I think that I need to come out and tell you when you see in the bearish market, how do you position yourself? How do you make use of this bearish market so that you can actually make money later on? So this is actually the topic tonight that I want to share with you. Look for the bearish candlestick, high volume. You start to look for your R1 and R2. And then on, when the market starts to rounding bottom and then turn up, that's where you actually can go in with the R3. So I hope that all the signal that I share with you so far so good, yeah? Now, this is another example that an uptrend stock. This is not a downtrend stock, but this is a stock that actually move upwards. So how do we handle all the stocks actually move upwards? When a stock is actually moving upwards, somewhere down the road, we should see something like this, shooting star, right? Or maybe a reversal pattern. And usually at the top, it goes with a high volume, right? So same thing, same strategy that I'll do is I'll mark R1, R2, R3 on this candlestick. Even the shadow, look at the highest shadow, I'll draw one horizontal line over here. Okay, so when the share price actually break the highest shadow, it tells me that even though the next one candle, you see, the next candle is not a white candle, the next candle here actually is another smaller shooting star, but it closed above the shadow here. So to me, I will still buy here, right? I'll tell myself this is R3. If I buy here, the stock didn't move upwards, but it retrace and go below, that's where I cut loss, right? But if you can close above there, I make sure that I'll go in this stock, but it's R3. R3 means that I only can buy one lot, right? So what I need to do in between is to have a R1 and R2. If I cannot, in between here, I cannot buy R1 and R2, then never mind. Then I'll stick with R3. I only can buy one lot. Okay, I hope you got what I mean. And then when I buy here, and then I'll ride on the uptrend. So once you buy here, subsequently what you need to do is wait for the pullback and then break out and then buy again. So you just repeat the process again. That's how you actually handle on the uptrend stocks. Okay, so I'll share with you how do we handle a downtrend stock, how do we look for a rounding bottom, and then how do we handle an uptrend stock. I hope that all this will give you all the opportunities in the market, yeah? Right, and so in RHB, we have this software called TradeSmart. And then in a TradeSmart, you can set a price alert and it's actually free. We also give you a filter, right? How do you look out for high volume? You see, today you need to pay money for a lot of software for filter, right? A lot of clients ask me, how do we look out for free software? So what you need to do is become an RHB client, use our TradeSmart, and then look out on the filter on high volume that you can get all the stocks, right? And most important is free, yeah? So I'll share with you some of the watch lists here. Before I go on to watch list, I want to explain to you, right, what happened in the market. So right now, what we do see is that the market is actually on a corrections mode, right? We probably will go below 1,005, right? Or we can actually rebound to 1559 and above, right? I can't 100% sure, right? But what I do know is that I want to show you this seasonal chart, right? Now, this is actually for the last 10 years, how our FBM KLCI performed, right? Those months that it went up, I mark as a green color. Those months that it went down, I mark with a red color. So just a very simple calculation, so we can see that in the month of January, look at January. January positive 3 means out of the last 10 years, only three times the January is positive. Okay, and then let's look at the May. Right, this is the May. Right, we are now in May. What do we see in the May? Out of the last 10 years, only 5 times are positive, another 5 times are negative. So we can see that in the month of May, very likely is a bearish month, right? Now, the good news is here, ladies and gentlemen, if you forget or you didn't remember what I tell you before this, this is a very important message. In the month of June, for the last 10 years, there are 6 times that the KLCI is positive, which means in a very layman term, May is a bearish month, but June is a bullish month. All right, I hope that this is a message that you can get it, right? Now, so what you need to do now is to consider right now, since we are actually towards the end of the May, right? You can consider to do bottom fishing, or in the early month of June, you can actually look for your entry. Now, people will ask, why there's a turning point here? Why? How come in the month of May is a bearish month and the June month is a positive month? Because there's one thing will happen in the late May that I call it MSCI rebalancing. Now, maybe you are aware, there's one index called MSCI in the world, right? They will do their revisions twice a year. One will happen in the month of May, the other time will happen in the month of November. That's why you see throughout the whole year, there are 2 months are quite bearish in the year. One is the May, the other one is actually November. Now, what happened follow next is that June month is very positive, and then the December month also very positive, because after the rebalancing, very likelihood the index is going to have a rebound, right? So once you understand this seasonal effect, what you need to do in the month of May is that really, really hope that the market will come down. So when the market is coming down in the month of May, honestly speaking, this is within my expectations, and I really want the market to come down very low so that actually I can help my client to buy at very low. Then we all make some money when the market actually rebound in the month of June, right? So that's why when Busa actually asked me to do event, I want to choose in the month of May. And I know that this May, towards now, 26th of May, the market is very bearish. And I want to tell you that the strong message here is that likelihood, I mean, based on statistics, you can see that the June month, there's a very strong possibility that we're going to see a counter trend rebound, right? So this is one of the key message that I want to share with you. That's why today I want to choose this topic called Candlestick Reversal Pattern. And right, and so I hope that you get my message. Then on, let's look at some of the stocks that actually I share with you. So firstly, we have a hibiscus. You can see the hibiscus today. This is actually yesterday's chart, also very high volume. But prior than here, then there's a lot of volume here as well. So I try to look at some of the candlestick with high volume. That's where I mark out some of the support level. So there are 144 on the resistance, 129 on the support, 112 followed by 89, right? So that's a 3 support level on the way down, right? Now on the way up, if you break 144, then it will go to the 160, right? Now look at hibiscus, basically it's a Sharia stocks. And one thing that I want you to understand about stocks market is that not only you need to look at the share price, 137, hibiscus closed at 137. Now the other thing I want you to know is that hibiscus right now is selling at about 2.7 billion. So when you buy a share, you need to know what is the market cap right now. So hibiscus basically is a share that market cap about 2.7 billion. Now then on another stocks at Dufu. Dufu is actually coming on the way down, and look at the volume, right? So that's actually a black candlestick here. So I mark out the black candlestick. Low is about 220. Then on I look for the historical volume, and I found out that the prior than that, the lowest or the highest volume was somewhere around 188, right? Now then on, I look at the upside as well. I saw that there's one hammer here with high volume. So I mark out this as my R3. 2.6 is actually my R3. So I tell myself, if DUFU break about 260, that's where I need to initiate my R3 positions. So right now in between today and 260, what do I need to do? I need to find out my R1 and R2. Okay, so I already given you my strategy on DUFU. If DUFU actually went to 220, well, probably I'll get my first entry. If you go to 188, I'll get my second entry. Now, if you go lower, sorry, I'm not going to add anymore, right? So I admit my mistake, and probably I'll cut loss, right? But if go to 188 and bounce up, break the R3, okay, that's where I'll add my third positions. Okay, so I hope you got it as well. Then on the other stocks that I look for is actually Kawan. Basically, what I do is I look at here. This is actually the previous top, high volume. So I mark out another same thing, support level. Then another white candle here with high volume. I mark out another support level here as well, right? So all these are using candle and volume. So I look out for where are the support level, okay? Right, so same thing, it's very, very easy. And one thing I want to share with you here is the 180. So if there is that the stock, you can't, let's say you just very beginner, you can't R1, R2. When the stock is coming down, you're too scared. But just remember you mark one level here, 180. When you break 180, that's where the R3 happens. That's where you need to get in to the stock. So when you look at all this thing that I shared tonight, what you need to do, you need a software that have a price alert. They will tell you, oh, look at this, the price have break the resistance. You need to do something. So what you need to do is, if I were you, I will get the RHB TradeSmart. I'll look at I use the alert to key in all the alert so that to remind me, because maybe 3 months down the road, 4 months down, I forget about this stock called Kawan Food, right? So alert is actually one very important tools to help us here. So same thing here, SamCam, right? You can see that SamCam also coming down, a black candle with high volume. So I mark out my R1, R2, R3, right? 87, 82, and the highest high is about 895. So you look at the SamCam right now, the R3 is 895. So if you break 895, okay, I'll go in. So in between now and then, what happened? I'll look for my R1 and R2. Okay, so worst come to worst, probably it'll go to about 76 cents, right? So that's where actually I'll prepare myself, right? As I mentioned to you, right, month of May is bearish month, month of June is a bullish month. Now, if the month of June is bullish, it can actually go a little bit further to July, right? Then on historically also shown August and September tends to be slightly bearish. So if I start to prepare all my signal here, at least I know that in the month of June and July, that's where I need to be very hardworking, because I know that R1 and R2 will happen in the month of June and July. Okay, so I hope that tonight you don't waste the opportunity here, right? You look at a lot of stocks, they actually have a lot of this black candle with high volume. So what you need to do is mark out the R3 and then look out for your R1 and R2 then. Okay. All right, TechScam, this is another stock actually, Sushi King, right? That's actually moving upwards. So just now I show you most of the stock is in a correction mode, but this is actually on the uptrend mode. So for the uptrend mode, what I do, very simple. I look for the high candlestick. I look for the candlestick with high volume, then I mark out all the support level, right? Then on, I'll start to actually repeat my R1 and R2, okay? So you see, trading is actually not that difficult. If you know what you're looking for, things can be very easy, okay? So this is an IPO stock called Synergen, right? Synergen, and you can see that today, wow, this is actually a white candle, and the volume is so high. So how do we approach this kind of stock? Basically, look at this stock, it's very simple, like what I told you, right? One candlestick, break it into 3 parts. So the first is here, 68, actually 675, because I draw the thing before market closer. You draw one line here, and then the middle body, another line, and then the bottom, another line. Okay, then after you draw all these things, then you tell yourself, this is between here and then, I'm going to look for R1 and R2 on the pullback. Now, if it didn't pull back, it break above, that's where my R3 will happen, it comes in, right? And then after you let's say you break here, then you only can buy one lot. You cannot buy 3 lots, right? So before you actually enter to your stocks, you need to know how much money you're going to buy, right? So if the stock go above, remember, you only can buy one lot, right? But if the stock actually pull back, you can actually have for R1 and R2, okay? So that's one of the things that I want to share with you. And you look at this stock Synergen, basically it's a stock with 333 million, right? Now, if you think that technical is one thing, you can actually look for some of the trading reports. So in my trading reports, we also have IPO notes. My colleague actually priced Synergen at about 70 cents. So anything below 70 cents, we actually can consider for actually entry. So that's why you look at the stocks, it looks pretty bullish today, right? You can actually put it into your watch list. All right. So I think about here, 8:40, we are going to open the floor for Q&A. Okay, so let me look at some of the questions here. All right. Okay, what time frame are we going to use, Mr. Asri Ismail? Basically, I'll look for the day chart. Okay, let me switch over to the thing. Okay, hang on. Let me. Okay, so this is actually our TradeSmart platform. So basically, I'll look for what I do is I look for a day chart, right? To actually answer Mr. Asri Ismail. Just for example, all right, ladies and gentlemen, I just want to share with you something. For example, in case you're too excited and then tomorrow you want to try this stocks, right? Okay. For example, you think that the stock is actually very bullish, all right? Tomorrow, what do? Instead of going for long, right, I'll look for a pullback. Just like I show you, I share with you, right, R1, R2, and R3, right? So your first stock will be a pullback, and then your second stock will be a pullback as well. Then only your third entry is higher than your first and second, right? So I always look for the day chart. But my first entry is always the balik. Means if I think that the stock will go up, when the stock actually pull back, that's where I'll go in first, right? May I know how do you see the recent SP Setia price actions? Mr. I think it's Wong. Okay. Okay. Yeah, let's look at SP Setia. Okay, let's have let's study this together, right? So what you do see is that SP Setia is actually coming down with high volume, right? So what I do is very simple. I actually mark out here. So for SP Setia, to me, the R3 could be 86 cents. It could also be somewhere around, because it's a high volume, right? It can be 1 ringgit. So for me, if SP Setia break 86 cents, then I'll have first position. If it break 1 ringgit, then I'll have my second positions, right? So in between now and then, I'll look for my R1 and R2, right? So that's what I'll do. I'll look for this 2 level, right? But look at the stocks, actually it's a correction mode. So we just need to wait for one more signal, which is the volume to actually, I call moderate. Now you can see a selling pressure is very high. This is exactly what I share with you. Remember, just now I show you the double bottom, right? So this is actually the left one. We haven't seen the right one. So maybe there will be a technical rebound, but I doubt it will cross 1 ringgit. So that's what I think. A good double bottom is the second bottom should be lower than the first bottom. And the second bottom, usually the volume is lower. So that's what I define it as double bottom. So I hope I can answer Mr. Yok Loon Wong. Yeah, so I hope that it helps a bit. And remember, any stock that you want to trade, never all in. Although you think that it's very low, you think that it can go for rebound, never buy everything at one go. Yeah, scaling in, right? Just remember my keyword here, scaling in. You can save everyone, and then you can make money. And Yes, basically I do same as my KLCI future as well. I don't have KLCI futures here. But what I do is what I can do is I'm using an index, right? I'm just uh, okay. I'll just use the index here, right? Because usually there are two type of traders. There are overnight traders and intraday traders, right? What I do is I'll mark out my level, right? Let's say 1559 is my resistance, and then another level are probably somewhere here. Let's say yeah. So normally what I do is I look for the black candle, then I'll break them into three parts. So let's say you think that this is the your I'm sorry because the okay, over here, right? If you think that this is your support level, right? Okay, that's Mr. B Uy, right? If you think this is a support level, when the stock actually break your support, now in a textbook will tell us when you break support, you need to sell. So I'll do the other way around. When it break my support, I'll buy first, right? Similarly, when it break my resistance, it looks like a breakout. But when it break my resistance, I'll do the other way around. I will sell first. Yeah. Just remember what I want to tell you. The first thing is that your thing, you must always your first lot must be a counter trend strategy. Yeah. So I hope that really helps you. So when I draw all the support resistance, simple. When it break resistance, I'll sell first. Then it pull back, I'll buy again, and then break again, I'll buy again. So I hope you got my answer. Right. So Mr. Hassan actually asked, can we actually use the similar strategy on a stock called Top Glove, which is actually on a downtrend, right? So I actually have tried before. Let me see on this stock. Okay, right. So of course now we don't talk about now. We talk about last time, right? You see, there's a black candle here, black candle here. So what I do is actually I break the black candle into three parts, right? You can see that this black candle is about 185. This is where the R3, right? Remember, I told you R3, right? So it break the R3, that's where you need to buy one lot, at least one lot. So in between here, you try to look for R1 and R2. I think, honestly speaking, during this period of time when the top glove happened, I myself also cannot get the R1 and R2, but at least I get the R3, right? I just share with my clients that that's where the breakout happened. You can actually consider on your entry price, okay? So you look at over here, when the glove is actually on the downtrend, what do we see? Okay, look at the volume here again. You can see the high volume is over here. So you mark out, this is the R3, 158. So you let the top glove to go lower, right? You tell yourself, right? You key in price alert. If the top glove break 158, then you go in with R3. So in between here, you look for R1 and R2. So in between here, what I do is I look for double bottom. Is there a double bottom? Does the any pattern that I spot, hammer, piercing pattern, bullish engulfing, or bullish marubuzu? So far, I didn't see any because every day is black color, right? I didn't even see a hammer here as well. So there's no R1. I also didn't see a piercing pattern. I also didn't see any bullish marubuzu. So R1 and R2 basically now is kosong. So only one I have is R3 that was 158. So I'll be patiently, I'll patient on this thing to go lower. And some more, you look at all the black candlestick, there's no double bottom here. So I just have to wait. Who knows, tomorrow there's one white candle, right? There's a bullish reversal. We can't tell. So we just have to wait patiently. All right. So that's at least you key in 158 as our R3, all right? Okay. How about if a very big bullish candle happen and above, the stock will go down. So I understand, right? Sometime when a stock actually have a big momentum, but the big momentum didn't follow through, what do we do? No choice, cut loss, right? So if everything that actually go against us, today after you listen what I talk to you, you think it's good, but tomorrow you go to the market, cannot do it, right? What you do is cut loss, save capital, right? But I just want to share with you that you need to practice what I share with you tonight. All right, go back and look at all the charts. Try to draw out all the lines as much as possible. Look out for R1, R2, and R3. Tell yourself next time if this happens, what should I do? Those things that I share tonight are all my years of experience, especially the first slide that I show you. Maybe I'll show you one more time. Okay, right. Where is this? Okay. Okay, one chart for technical. For those of you who like price and volume, this is one of the chart I really want to share with you, so that I think most guru or most people in town, they actually didn't say that way. Most of you just only look for a breakout signal, and it's very hard to. Okay, this is the slide that I want to share with you. You can actually take picture or screenshot, right? So you see, this is actually a very good double bottom where the market is coming down. This is the volume, and then the second bottom, the volume lower, and then it starts to actually sideways. You see, when the sideways happens, that's where I will tell you there's a lot of fake breakout. You break out with high volume, but later on you break down, and then you can get a lot of haywire here. So that's why actually I designed my trading system called scaling in. If during here, you won't get caught by the fake breakout. During here, you see, break the support, you also won't get caught here because you are not going to buy all your 3 lots. In fact, you buy your 3 lots, all the price are different. You can scaling in, you're scaling out. So your risk profile are very different. Look at this double bottom. If you buy 1 lot here and you buy second lot here, your risk profile also very different. And then when you have a scaling in, when your risks are all spread around, your psychology are very steady. So that's something that I want you to have it, right? And then if you can position somewhere here, when the real breakout happen, R3, that's where you buy. You know on hand, your R1, R2 already make money, and then you buy on your R3, R4, or R5 higher, you have no stress. You can actually ride on the uptrend. So that's what I want to share with you. And looking all the corrections will happen in the month of May. That's why in this month of May, especially the next 2 weeks, in the month of June, a lot of trading opportunity will come. That's why I want to share with you all these things. Yeah. Okay, let's go back to the chart again. Okay, let's look at this Sedania. You can see that Sedania is a white candle here, right? So if you really want to do Sedania, you actually do 3 lots. Try to draw out the support level. So if the Sedania go lower, then no choice. We just have to admit the loss and cut loss. Okay. That's about Sedania, right? So it depends on your entry price. I can't tell whether Sedania is going up or going down, but at least I know right now it's this is the white candle. This is actually the 3 level that I'm looking at. Okay, and so let's watch. I think the lowest support we can actually look at will be somewhere at 32 cents. Okay, right. So I'm not sure entry price, but you actually have to look at the thing and then try to see how to actually manage on the Sedania positions. All right, I think a lot of people also asking about the glove. I think I have shared with you just now the top glove, right? I have actually marked out the R3, but I haven't seen the reversal pattern yet, right? Fake breakout. Basically, how do we know that's a fake breakout? Means after a breakout happened and then the stock pull back and that's you start to lose money, that's a fake breakout, right? Okay, there's another friend here asked about Inari. Okay, let's look at the Inari. So basically, you look at Inari, what happened? Okay, when you look at the stock, first thing first is look for the black candle, right? Look for the selling pressure. So you can look at Inari. There's a one black candle here, and then there's another black candle here, and the volume also, both also quite high, right? So what I do is actually I'll mark here, and then this one. Okay, over here, this black candle, yeah, over here. So I know that for Inari, very simple. If you break 287 or 294, that's where I call my R3. right? So in between here, I try to look for the double bottom. So you can see that there's a white black candle here and another white candle here. So it's actually forming some kind of reversal. So to me, yes, there's a reversal happening. So can consider for your first lot, right? And then if it go above, then consider your second lot. Then it break 294, then your third lot. Okay, so this is actually the Inari. You can actually rounding bottom. You can actually consider, but again, never buy more than 3 lots when it's actually happening here. Yeah. So remember your R3 is over here because you already see this is a black candle. That's your R3. So your third lot is over here. So the maximum somewhere here, you only can buy 2 lots, 2 out of 3. Okay. So moving average, usually I'll do mix my moving average with candlestick. Tonight, what I'm sharing you is a price and volume. So basically that's what my purpose is. But you look at the Inari, there's actually a high volume here, low volume here. So probably there's a double bottom in making. So whether it's a very good double bottom, I need to see down the road whether it break 294 or not. But in between, yeah, I just share with you our scaling in, right? Okay. So there's so many stocks that people have asked. I can't go through all the stocks and all the charts, but I try to actually look for that. Before I begin, I know most of you asked me what was the bar dynamic, right? I think this stock is everyone you like it, right? So no choice. We look at Sabah dynamic. So what do you see? Sabah dynamic, white candle, high volume. So technically speaking, you can actually mark somewhere here, and then you see there's another black candle. Then what do? We mark another black candle. So actually, at least you know your range here, right? But one thing I want to share with you, Sabah dynamic, not only you mark out the price, you look at the share price, 0.165. Every single bit actually very painful. You get it wrong, it's actually very painful. My experience tell me there are so many stocks in the market. You no need to make money, die must make dynamic, right? You can actually look for other counters. Because you look at the bit size, every bit actually costs a lot of money. If you are wrong, then you have trouble, right? So that's the thing. But there's no right or wrong, right? But at least I mark out this price first, 0.165. So if you can break 0.165, that's where the R3 will be triggered. Right. So in between, I just look for whether there's another whether the selling pressure, whether there's another black candle or will come out for double bottom. Yeah. All right. So that's so let's talk about Singhin. All right, a new IPO stock. Interesting. Let's look at the new IPO stock. So what we do see here, right? You can see that the stock actually going down, right? Long black candle, yes, long black candle, but this look, the volume is not high enough. Previously, the volume was so high. In fact, here the volume is here. So to me, Singhin is going down. But I think the selling climax hasn't happened yet, honestly speaking. I think probably there will be another down bar with higher volume. So just wait for that to happen. Just in case this is the longest bar, so I just mark out here as my R3, right? Personally, I think this is still not a very good R3 because you look at the volume, this volume is still a bit low. I really want to wait for the higher volume with a longer black candle. It gives me that kind of selling climax. I think that the selling climax has not actually happened yet from what I see right now. Okay. Okay. I think a lot of people ask me about fake breakout. Honestly speaking, I can't tell whether it's a fake breakout, but I just want to tell you that you do scaling in. Imagine that this is another stock here that actually went up, right? You went in and then too bad it came down. So the lesson learned here is that never buy everything at one go. Just have to, break it into parts so that you never get caught over here. I know that for human, because of that FOMO experience, you see the stock actually going up, right? And it go up with white candle while you think that this stock is going to the moon. So I understand your feeling, right? But I just want to mention one more time, never go all in. So you have go in batches, right? That's the only thing I can share with you. I hope that you do. And the other thing that I really want you to remember tonight event is about this MSCI rebalancing. Not everyone talk about that. And just remember tonight, one of the things that I want you to remember is that based on seasonal effect, May is a bearish month, June is a bullish month, and then November is a bearish month, and December is a bullish month as well, right? So that's based on the seasonal, you can actually make some actually good decisions. And just remember scaling in and scaling out, and then that's about that. So I think we have a lot of similar questions, but due to time, I think we'll stop here. Now, the other thing is that if you want to know more about all these things and you think that I'm telling you something very interesting, right, do become our RHB client. Now, every morning at 8 o'clock in the morning, we share with our members, our clients, what's the market is about, and then we give them about strategy, we give them about stock picks, and then sometimes we also invite company to give presentations. So if you're really very interested, look for my colleague, write to us, become our RHB clients, right? Thank you, everyone, and I'll pass the time back to Shaz.
Thank you so much, Mr. Joseph, for walking us through on how to understand with the price action and also market review, trading opportunities ahead. And also, I would like to say thank you to our participant also for your active participating. And then we have already reached the end of our webinar. Once again, I would like to thank you to everyone who participated and also for our speaker today, Joseph Chai. And I think Shaz here will signing off as your moderator. And good night, everyone. Good night, Mr. Joseph.
Okay, bye-bye.
Take care.